something developing. We have some clear pattern that is starting to develop, and there's follow through in this pattern. What pattern am I referring to? I'm referring to the simple fact that when you look at the Bitcoin chart, you see this June low holding, right? You see a higher low potentially that is formed right here in the month of September. At the same time as the Dow Jones forms a lower low after that June low. What do we call that? We call that divergence. Divergence is everything, right? Divergence tells us if momentum is changing, right? So, of course, we have divergence in the RSI, but we have divergence from asset to asset, right? So, what's the RSI divergence? This is bullish divergence. This is the RSI setting higher lows as the Dow Jones sets a lower low here. That is bullish divergence. Bitcoin setting, potentially, a higher low while the Dow Jones sets a lower low. And that's, of course, relative to that June low. That is divergence. Ooh, what else do we have for divergence here? Whoa, that's some interesting divergence. One of the most important assets in the entire crypto market is breaking out, maybe really following through with that move that it began back at the end of September. This is more divergence, right? So divergence tells us when momentum is shifting. It seems like momentum might be shifting, and crypto is sort of giving us that leading indicator that that's very possible. So if we look at the Dow Jones just on its own, it's like, wow, this is horrible. Like, what do we have to look forward to? Like, there's nothing really bullish about this chart on the surface, but I have the moving average on the chart. If I got the moving average on the chart isolated, this chart actually does have bullish moves likely in the near future, simply because of how far away it is off the moving average. Because if you look what happened in June, right? How far away do we get from this moving average? You got like the farthest you've been away from moving average in a very, very long time. Just to measure that, like what was this percentage here? You know, something about that, like almost 14% back in June, before the market reversed and had a powerful move to the upside. During this move, crypto pumped. TRB, massive move in that time. Bond, massive move in that time. Filecoin, pretty decent move in that time. That was like a 3x. But let's look at this right here. What percentage are we away from the moving average right now? Let's see. Well, a little bit. It's a little farther away from the moving average now than it was back in June when we had that bottom that came before that rally. So that's interesting, right? You would think that in the relatively near future, coupled with this bullish divergence that we're seeing, we're likely to see, at the very least, another test of this moving average. Now, can I say for sure if we're going to get through that moving average? Obviously not. And the probabilities favor that you probably won't get through the moving average, because you didn't get through it here, you didn't get through it here. Is the third time going to be the charm when you do get through it? Well, I don't know. You know, we don't know about that. I think one of the things that will help us to know if we're likely to break above this moving average when the Dow Jones inevitably comes back to test it is what crypto's doing in that moment, right? So if, say, crypto is ripping, right? Like, say over this next month, maybe the next 2 months, when the Dow Jones decides it's ready to retest that moving average, if crypto starts going psycho-ballistic in that time, and say the Dow Jones is like halfway up to the moving average and crypto is already taken off, and it's like, whoa, is this what we've been waiting for? Is this the prophecy? It's like, that would be a sign that the Dow Jones is probably likely to halt at the moving average and then turn over again, right? Because the thing that's going to happen here is crypto is going to make a big move in the very, very near future. And as time passes, it looks more and more likely that that move is going to be to the upside. Now, back here, at the end of August and September, it looked more like crypto could get sucked down because the stock market was likely to just continue down. But now what we've seen as time has played out is the stock market continued to go down, but crypto held. And some crypto tokens actually ripped significantly in that time. So it's really starting to look like that this is turning out to be a significant bottom in the cryptocurrency market, which is actually, at least in the short term, bullish for the stock market. So my point is, stock market's going to be coming into a retrace at some point here, at the very least to test this moving average. Depending on what crypto does in that time, that will really tell us, is the stock market prepared to set new all-time highs or not? If, say, the Dow Jones comes up to this moving average and crypto has moved a little bit, it's going to move. It's definitely going to have some positive moves if the Dow Jones does make this move to the upside in the near future here. But depending on the size of those moves, that's going to tell us everything we need to know. So, for example, if, say, Bitcoin moves like 100% in the time that the Dow Jones moves, like Bitcoin doubles in this time, I would say that that's a sign that this market, the stock market that is not likely to set a new all-time high. But if crypto is just sort of grinding along to the upside, maybe some altcoins are starting to pop off, that's actually more bullish for the stock market. And I would say that that means that it's likely that the Dow Jones does pass through this moving average. It's when you start to see the explosive, like just the really, really big, explosive, fast parabolic moves, that's when the market is actually signaling that it's about to turn really, really bearish. Those slow grinds signal that you have more sustainability, right? You have a move that could take more time to play out. It's when you start to see the giant parabolas that you got to be like, okay, like something bad is going to happen very, very soon, because those giant parabolas are typically unsustainable. And that takes me to what's going on with the DXY, a giant freaking parabola, right? I mean, at this point, you got to be thinking, how much more room does this thing have? Could it really, really keep going? And it's like, well, yeah, I probably could, right? Because this thing could get more parabolic, right? And we just want to be mentally prepared for whatever this does. And I think you kind of have like the most volatility ever, right? You have like huge, huge volatility over the past 2 weeks. These are weekly candles. And so that gives us a nice swing high to a swing low to sort of just like anticipate what's going on here. Couple of interesting things that jump right off the chart is, the first thing is, like, look where the 702 is, right? It's approximately right where that 1618 is. So that's pretty interesting confluence. So we'll see what happens when the DXY gets to this level right here. If it breaks through this level, then I think we should all be prepared for the DXY to run like the full gamut here and like do this, potentially this Fibonacci extension, which probably very likely would be the end of this parabolic move on the dollar. But this thing could have like a volcanic blow off top. No doubt about it. And that could be really, really bad for the stock market in the short term. But no matter how bad it is for the stock market in the short term, no matter how bad it is for crypto in the long term, the smartest thing you can be doing right now is unloading your dollars, because your dollars are going parabolic. And you put those dollars into assets that are way down in the dirt, which is like everything, right? So that's the obvious thing to do. So it's like, yeah, maybe this thing could keep going higher. We don't really know, but the probabilities increasingly favor a reversal on the US dollar. And it's obvious that assets are just like, they're ripe for the buying right now. They don't get more ripe than this. They really, really don't, especially when you're starting to see those positive divergences sticking out, right? You're starting to see that some assets, crypto pretty much as a whole, is really holding its ground at this level in the midst of the worst possible market conditions we could ever have, right? Stock market is like literally trying to kill crypto right now, and crypto isn't dying, and some crypto is actually thriving right now. So all of those divergences, like, now we're at that kind of point where there's some clarity starting to emerge here, and that's that it looks like crypto is more likely to make a move to the upside than continue this downtrend. If I'm just going off of pure trend analysis, it's like, well, I'm kind of going against the market. I'm fighting the market if I'm bullish right here, because all I see is, a low, lower high, lower low, lower low, lower high. That's all I see. I just see lower, 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 lower. That's what the trend is showing me. But when I consider all of the factors that are influencing this market, Then I start to see strength. I actually can almost like flip my script and be like, well, this is actually strength because of what's been going on in other markets. What's been going on with the Fed just trying to scare people out of the markets, right? And it's like, why do they want to scare people out of the market so badly? Well, that goes back to the same tinfoil hat stuff I've been talking about for years, right? Which is that they don't want us to make money on these assets, right? They just simply don't, right? There's more of an emphasis on, scaring us into the dollar, right? Scare us into the dollar. And the thing is, the dollar is the worst of all these assets, right? There's too many dollars. It's getting more and more worthless. Like, it's the worst asset. But with all the fear talk that they're putting on us, the fear of, oh, we're going to, kill demand. We're going to kill the labor market. That's all fear, 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 fear. That's trying to scare us into the dollar, which is the worst asset because the dollar is losing its purchasing power over time. Even though the dollar continues to rise, this is what this is. This whole chart here is like dollar rising. Rising relative to what? It's rising relative to other currencies. It's not rising relative to the cost of goods, right? The cost of goods and housing and gas and things, those only started to pull back very, very recently, right? And that's maybe the sign where like inflation could be coming to at least a near-term top, right? But the real point I'm trying to make is that the dollar is easily the worst asset that you could put your money in. And not only that, it's going parabolic, which is like, okay, so A, it's the worst asset. B, it's in complete euphoria. What does that mean? That means you should dump your dollars. And what should you dump your dollars for? You should dump your dollars for all these cheap assets like Bitcoin and honestly like stocks too. Like basically anything but the dollar. Like the tide is turning, right? The dollar has had its run. Its run is coming to an end. Of course, that comes at the same moment where crypto, stocks, even housing to a certain extent, it's like you should be bullish when everyone else is bearish. That's really the simple fact of what's going on here. And I start to see a lot of those divergences. I'm like, okay, now I actually have something to hang my hat on for like the momentum actually shifting, right? You're starting to see the case for the shifting in momentum, not just the fundamental macro shifts, but the actual like micro shifts that you're seeing like in a technical sense with what's going on with, of course, the RSI on the Dow Jones, but also other assets relative to the Dow Jones, right? XRP. It's like, is this a coincidence? Is this a mistake? No, there's no coincidences. There's no mistake. XRP is telling us something here. It's telling us that this is likely a move that will continue. I mean, jeez, I don't want to get anyone's hopes up here, but I mean, it really seems like it though, right? Because look what's going on here. Look at this candle right here. Look what happened at the 702. This candle, this daily candle, it looks like it's going to close above all retracement levels on this local structure here, meaning that this local structure is likely to have follow through on it. That's what it means. XRP looks pretty bullish. Like, it's setting up kind of a breakout trade situation potentially. I mean, we don't want to get too excited. Anything's possible, maybe this thing is just setting up to dump and it's just a total, fake at this point. But that's what we could have thought, days ago, back here on this candle, back here on these candles. Oh, it was fake. It's just, there's no follow through. Well, now you got the follow through. You're through retracement levels as we speak at this moment. And it's like, okay, like that's important information, right? It really tells me that this move in the dollar, although it could continue, the only reason that the dollar has pumped so much is just because of the fear. And the fear is part of a theatrical narrative that the government, the Federal Reserve, that's what they want us to be fearful in this moment, right? If they want us to be fearful, they want us to keep buying dollars so we pump this thing, then we probably shouldn't be doing it. Because as we've seen over the past 2 years in this whole, this like post-COVID situation we're in here, it's like now we pretty much know for certain that the government does not have our best interest in mind at all. Like, literally, they don't. They, quite the contrary, in fact. And so it's almost like whatever they tell you to do, you should do the opposite. So if Jerome Powell is saying, like, yeah, no, we're going to kill the labor market, we're going to destroy demand, that's why we're raising interest rates, we're not going to stop, and he's trying to scare you out of your assets, and he's trying to get you to buy U.S. dollars after the U.S. dollar has gone parabolic, it's like the facts couldn't scream harder in the other direction. Like, it's never been more obvious that everything he's telling you is completely opposite of what you should do, right? That's the way I see it. It's really that simple. And as I'll just say, like, how many times have we looked at the Fed funds rate against these markets, right? It's like history tells us what's going on. It's like, why don't more people just look at history? Ooh, look at this thing. Look at this thing starting to roll over almost here. It's rolling a little bit more than it has in the past. And what have I said? When this thing starts to roll, you're going to have the blow off top. You're going to have the final upswing in the markets. And now you start to see this thing rolling over a little bit more. This chart is telling you that the Fed is going to pivot. That's what this is showing you, right? In just the smallest, tiniest little, just the tiniest clue, it's really telling you, like, if you really zoom in on that, you see what I'm saying here. You see this. You see this turning over, right? You see this chart is telling you that the Fed is going to pivot soon. What did I say about the Fed pivoting? When the Fed pivots, that will be Cryptmas. That will be the euphoric blow off top in these markets, and that will signal the end. That's the end. That's when these things pop off like firework gangbusters, and you get out and watch this market crash to hell. That's what's going to happen when these interest rates roll over. When they roll over, that's when the parabolic euphoria occurs, and then when they move to the downside, the next thing that will happen will be the markets move to the downside, just like what happened in the summer of 2019 ahead of what happened in the spring of 2020. It's going to be the same situation. And as we look at this thing starting to roll over, it's like that's what I think. It's not going to be Fed raising, which would actually lead to a more sustainable market environment, because that would actually contribute to curbing inflation in a long term. But as I said many times, they don't want to curb inflation. That's not their goal. That's never been their goal in the history of America. They don't curb inflation. They want inflation. They want to remove the purchasing power from the people. They want inflation. So fundamentally, you have to realize that they are going to pivot because they don't actually care about stopping inflation. And this chart is telling us that. This chart is showing us that a rollover is going to occur. And at some point, the Fed's going to come out and make a speech that nobody sees coming. They're just going to be like, yeah, we're going to put the brakes on. We're going to do a pause in interest rates. Markets go off like a freaking rocket. And that is the euphoria that will probably trigger the altcoin season. That will be Cryptmas. That will be everything we've been waiting for 2.5, going almost 3 years now. That's going to be that. And now you're starting to see that happen. So, I mean, good, dude. You know what I mean? Like, is that not good? I mean, it's pretty good, right? It's pretty good. Like, my assessment is that in the relatively near future, let's say within 6 months, very approximately, very loosely, you're going to get that retrace. You're going to see Bitcoin do a retrace. You're going to see the altcoins do the move that you've been waiting for them to do. And in all likelihood, this is a great moment to be buying. You know, not necessarily Bitcoin. I mean, Bitcoin's not a bad asset to be buying. I mean, you'll probably double your money in this move, potentially. But really, it's about these altcoins. It's these altcoins that are at these insane lows, right? That's the opportunity right here, right? The opportunity has never been better. It's literally never been better than it is right now for all those reasons I just said. A major factor is that this thing is starting to turn over. That's like, okay, we're getting close. We're getting close to the parabolic euphoria. And nobody sees it, right? If you look at the chart, you're like, what parabolic euphoria you're talking about? These charts look like death warmed over, right? They look horrible. But that's typically how they look before the parabolic euphoria hits. And the thing that will cause the parabolic euphoria is perfectly set up. That setup is the fact that the Fed has now put themselves in position to pivot and surprise everybody. But the bigger, deeper surprise is that that's ultimately bad for the markets. The Fed pivot will cause this giant parabola that's, the biggest bull market in history. Is how many times people have said that recently, right? The biggest bull market in history. It's going to end when the Fed decides to lower interest rates. That's what's going to end this thing. But the culmination of this market will likely be a parabolic blow off top, not necessarily in the large market cap assets, but in the small market cap assets, the ones that we've been waiting for all this time. So, setup continues to take shape. The divergence is strong. It's clear. It's just like, it's good. It's good, dude.